At HUL and their third quarter numbers, they've met street estimates for sure. Revenues have grown 1.4% on a year-on-year basis, and the net profit is up a whopping 19%. But that's on the back of an exceptional one-time gain, which is from the sale of Purit. Among the segments, home care has seen the highest revenue growth, 5.4% compared to the last fiscal. The board has also approved that demerger of the ice cream business and also acquired controlling stake in the skincare brand, which is Minimalist. But my colleague Snehi had a word with the management. Several topics came up for discussion, their volumes, also how Lifebuoy and Lux are shaping up for them, what the distribution strategy is. So we've got you an excerpt of that chat.
At a meta level, our volumes are ahead of the market. We are gaining volume-led competitive growth. And because we report UVG, which is a mix of volume, which is a combination of volume and mix, as Ritesh just explained, our mix this time is negative, which has taken a UVG and made it flat. And that's on account of the fact that home care, which is a big category in our case, is going quite ahead of the rest of the categories. And we have also an added element of pack mix, where small packs are selling way more than the large packs. And that's specific to this quarter. We expect that to be transitory as things normalize going forward. So that's one reason why the optical number is what it is, which is underlying volume growth. But we do remain very focused on growing volumes competitively. Insofar as the pattern of volumes are concerned, as I mentioned, rural is coming back, and we see that gradual recovery quite sustained. It's urban where we actually see some more pressure, which is driven by factors that are probably macro in nature. And we remain, of course, as mentioned, focused on, in these conditions, driving competitive volume-led growth across our categories.
Okay, and also want to understand, gentlemen, that your beauty and personal care segment, which is the BPC segment, has seen some sort of slowdown because of the slowdown seen in the hygiene segment. Now, to address this, in the previous quarter, you have also relaunched and reformulated Lux and Lifebuoy. Can you tell us what the consumer response has been to that?
So just to speak to the hygiene first. So hygiene segment is a large segment in the personal wash market. Lifebuoy is the leader in that segment. And in COVID, we did get the benefit of the tailwind of the increased sensitivity to hygiene. Over the last few years, the segment of hygiene has come down and consumers have moved on to other segments in the market. Lux, being a part of the beauty, is therefore gaining share consistently and is doing very well and is really being expanded across all many demand spaces, including sandals. So on the whole, Lux is robust, vibrant, and growing in a growing segment and expanding into white spaces. We are transforming its proposition from being just for illness prevention, which is quite narrow and becomes somewhat generic, to technology that allows for skin health protection. We're using clear, credible sources such as a dermatologist to make that claim more and more sharp and compelling. We are, as we speak, announcing the change in the biggest stage of all, which is the Kumbh. This month, we will actually unveil the new Lifebuoy. We have revamped the packaging, made it more modern. We are bringing in new assortment. We're expanding into freshness demand space, and we're going to back it with really strong investment on media and below the line.